So it is the 21st century, as you know, yet some myths about Africa still persist, like the idea that it's a single country or that lions roam some of our backyards. Light as they may sound, these myths, of course, reflect a deeper issue, and that is the gap between perception and reality. And that gap doesn't just shape casual conversation, it shapes capital flows too. Hello and welcome to this special broadcast on Shifting the Narrative, how perceptions shape investments in African investments. Vehicles, you'll recall that last year, Africa attracted 97 billion US dollars in foreign direct investments, and that was up 75% from the year before. That may seem pretty impressive, but that's still just 6% of global FDI, and despite the continent being home to 17% of the world's population. You compare that to Latin America's 8% or Southeast Asia's 10%. Even with stronger signals like a jump in private equity deals and a $4 billion US dollar in capital raised, investments in Africa still fall short of its true potential. So over the next hour, we'll ask what stories are shaping investor sentiment here on the continent, where are the blind spots, and how do we work together as investors, as fund managers, media, and even policymakers to build a more balanced and compelling narrative about investing in Africa. We'd also like to hear from you too, and you can take part by scanning a QR code displayed on the screen. Questions are going to follow towards the end, and we'll get a sense of your mind, and this is how you and I will be able to engage. But to get the conversation going, I'd like to introduce you to a seasoned panel of investment professionals who bring diverse perspectives and experiences from across Africa's investment landscape, beginning with Edzard Shepbeer, the Associate Principal Capital Growth at Metia, Neke Eze, a General Partner and Managing Partner at Vested World Rising Star Fund, Revachinyi Madava, Senior Investment Manager at Norfund, as well as Jen McBruce, a Senior Director for Investment Finance at Mira. Ladies and gentlemen, to you all, thanks so much for joining the conversation that I'm sincerely looking forward to. Neke, to begin with you, just given the fact that you are one of the first-time woman-led fund managers here on the continent, I'd just like a sense of what it's been like to walk in your stilettos in terms of your capital raise experience and some of the stereotypes and narratives that you've had to contend with.
Thank you so much for having us. I have to say I'm running in flats, but I'm really impressed by those running in stilettos. I studied economics at Harvard, and I think one of the things you learn is how markets really function. And what we hear is that it's really about making rational choices. But what I've experienced is that investing does include a lot of going with your gut as well. And part of our work at Vested World is honing that gut and seeing how we can back some of the best founders in Africa. But it also means that we have to trust our investors, they have to trust us. And unfortunately, what we've seen in terms of how capital is allocated coming into the continent, the gut is working probably maybe as it has been historically. So if you look at the US, which is the largest financial market, white men manage 98.7% of assets, and this is from a Knight Foundation report. And that's despite the fact that women and minorities make up a significant part of the population. And then if you look globally, women manage only 12% of assets under management. And that's based on numbers from the past few decades, and that hasn't really changed. Then you zoom into Africa and you say, okay, Africa at least is getting capital in. But what we're seeing, and historically it's stayed about the same, only about 1% of global capital is going into venture capital, which is the space that we invest in Invested World. And what you would think based on our GDP, based on our population, is that it's probably going to be closer to maybe 4, 5, or 6% of global capital should really be coming into the continent. And we see great opportunities for that. When you think of all these bits of data coming together, I think what we're seeing is that capital is not really flowing to Africa. It's not really flowing to women. And then it's surely not flowing to Black African women. And so then what can we do about it? I think if you're going to go out and raise money as a first-time manager, it's always going to be difficult. You're battling with not having institutional backing. You're battling with, hardly paying yourself. You're battling with going into reserves. And one of the things that we were lucky to have with Vested World was a bit of track record before going into the first institutional fund. But venture requires patience, and it requires investors or limited partners who are really going to trust you on that long journey. We are investing more in essential products and services and backing founders in sectors that we think have generally been overlooked by the industry. I think the perception, another perception or stereotype, is that venture capital in Africa is going to operate like it does in other markets. But I'd say our view is that it needs to be different. It needs to be tailored to the local environment. So we're going to have to persevere. We have to do storytelling, bring the media along, bring others along on the journey with us, because as much as we can try to survive in that first decade, then move into the second decade, venture capital really is a long game. So I think it's going to be hard no matter where you are in the spectrum, but I think probably a little bit harder if you're doing this in Africa as a first-time manager, as a woman, et cetera.
Sure. Thanks so much for setting up the context for us. And if you allow me to come back to you, just in terms of some of the really interesting points that you mentioned, saying that in terms of investments that are made, of course, these are decisions that are rationally based. They're made on the data that supports why capital is located to a certain area. But you also mentioned an element of gut. With Africa, you said that not enough money is flowing our way, despite the fact that some of the data metrics supports more money coming our way, or should support more money coming our way. Based on your experience, what is behind this trust deficit that you did make reference to?
Part of it is just information flows. A lot of investing, at least in the early stages of venture capital, it is about storytelling. And we are probably all aware of some of the gaps in storytelling around the good news and the positive business stories coming out of Africa. So I think part of it is doing that storytelling about the emerging ecosystems that are coming up in venture capital, about the companies that are having significant impact and creating jobs in the markets that we invest in. So I think that is part of it. And part of it is that global capital, as I mentioned, is still really tightly held and allocated to a smaller number of managers, a smaller number of markets particularly. And so I think part of it is looking at both global financial ecosystems, but also local financial ecosystems to say, how can we put pressure to look at emerging managers, to look at female managers in Africa? And the hope is that storytelling will help change how people think about honing their gut and what their experience is of those type of managers.
Okay. Riva, coming to you, I'm not too sure if, like Neka, you run in flats, or like me, you occasionally step into stilettos as you move around. But take us through your experience in terms of moving around the investment space as a senior investment manager there over at Norfund. What has your experience been like about some of the perceptions that are shaping capital that come onto the continent?
Yeah, no, that's a great question. And to answer your other question, it's always in stilettos, always. But so what we have seen, I think it really shapes what I view as both the challenges and the opportunities of investing on the continent. And a couple of things in how narratives are being shaped and what we're actually seeing. So first, I think there is this perception that there are governance issues in, let's say, African-based managers. And to that, I would then add that our experience has been the opposite of that. We have found that fund managers that we have looked at, even if we haven't invested, have got strong governances in place, board, investment committees, often all of them with independent members. And so going back to why there's a governance gap between what's happening on the ground and perceptions, I think going back to Neka's point around storytelling, there isn't enough storytelling around what is actually happening on the funds and what the funds are able to achieve. And I think we need to do a better job as investment professionals of telling the stories that we are seeing on the ground. And then secondly, on the perception of risk, there is, the way that I'm understanding it, this perception that, you know, investing in African fund managers is quote unquote riskier, which means that you're more likely to lose money. I think the data also speaks just not even based on our experience, but globally and regionally against that. If you're looking sector specific, you would find, for example, in the sectors that we look at, in infrastructure, infrastructure default rates in Africa are amongst the lowest in the world globally. And so that perception of risk versus what's actually going on the ground is again mismatched. And then if you're looking then at an overall sector specific number, there's one that was published by IFC a couple of years ago. And that number, if you break it down, a lot of the defaults were quite early on in the period that was looked at. So that was between 1986 and 1995. But if we look at just the last 15 years, for example, that default rate would be significantly lower than the 6.7% that the IFC has quoted. And so from your risk as it translates to you losing money, I also think that there's a gap there on what is perceived or what the narrative is versus what is actually happening on the ground.
Okay.
And then lastly,
apologies
and then
for that.
lastly,
Continue. Lastly.
Yeah, and lastly, it's just on Neka's point on how investors make decisions. There is a need for, as investors, for a track record or something that we can use to base our decisions on. And the nature of fund investments or of investments in general from both a private equity or private credit or VC investment landscape is that it's quite nascent in Africa. It's new, so there isn't particularly a track record for investors to look at or to base their decisions on. And so I think another point there would be we need to maybe tailor sort of the due diligence that we do when we look at African fund managers to make sure that it incorporates this nuance that exists, that this is a fairly new space. There isn't a lot of fund managers with a track record, and we need to take that into account.
Yeah. The good points there in terms of throwing forward to solutions. But Riva, I want to ask you once more, just looking at the trends in private equity and private capital deals that have emerged in the last 4 years, just referencing some data in front of me. So obviously in 2020, it was the COVID year, and the funds to all parts of the world took quite a knock. But I am looking at the fact that around 1.2 billion US in capital was raised in that year nonetheless. It picked up quite a bit in 2021, up to 3.3 billion, picked up even further to 4.4 billion in 2022, and then afterwards there was a little bit of a decline in 2023 before getting to this 4 billion that we referenced at the start of the conversation. So it's a question around trends, if I may, and your experience around the trends that have been shaping the narrative of capital being allocated to fund managers here on the continent. You made reference to the governance deficits, and I just want to know from a trends perspective, do you see things improving or are they getting worse?
I definitely see an improvement, and one of the things that influences those trends is often real risks around micro risks and political risks in the countries that exist in an African landscape. So a lot of that you would see for every time where there is a drawback in capital, there would have been one or two issues politically or macro that drive that sentiment. And a lot of that, even if it's 2 countries out of the 54 countries on the continent, tends to overwhelm the narrative that goes on around what's happening on the ground. And it's around just putting that sort of trend or those sort of macro issues in context that I think again will help get more information from the trend, because the trend that happens now, it exaggerates whatever macro political issues happen, and that's probably what we're seeing in 2023 when there was a drawback, in 2024 when capital comes back into the continent again.
Yeah. Okay, no, thanks for that. Because it has been my experience as well, just, the 1 or 2 conversations, actually it's been a whole lot more that I have had with individuals such as yourself, as well as your stakeholders in this industry about, PE and the landscape here on the African continent. What we did see in the past the 3 years in my experience, my lived experience, is the fact that quite a lot of the funds that we did see, or the capital investments that we did see, were channeled towards specific areas. So you had areas in climate finance and digital infrastructure and some local manufacturing that seemed to steal the show. And it was also quite regionalized in terms of which areas were able to attract to the greater local as well as foreign interest. West Africa and East Africa jumped out quite a bit, as well as South Africa, of course, as where I'm speaking to you from. But Jen, if I get you in, just given the fact that the Mastercard Foundation Africa Growth Fund is hosting us in this very important and timely conversation right now, maybe you can just take us through the approach that you are applying in trying to change the narrative, but also in trying to back a lot more of these local fund managers, female-led fund managers as well.
Thank you. Yeah, so I think that from the perspective of the Mastercard Africa Growth Fund, we have a solution in place that is bespoke based on the blueprint of the investment vehicles that we are investing in, the fund managers that we're investing in. We're very focused on building foundations that are going to steepen local capital mobilization with a very huge focus on long-term sustainability. I think one of the things that we recognize both in the venture capital market and the PE space is that you do need patient capital and you do need solutions that are very different from what we find out in North America and Europe in terms of the structures in which we want to invest in. I think typically a lot of people want to have structures that have worked in North America and in Europe, and which doesn't necessarily sort of account for the cultural context and nuances in investing in Africa or on the continent or in emerging markets as well. And so for us, our approach has been catalytic capital to absorb losses, providing direct or implicit subsidies on the returns, and then also making sure that we are actually providing business support services as well. So part of the Mastercard Africa Growth Fund provides a business development service that sort of helps to strengthen the fund managers and the investment vehicles to ensure that they are able to build the capacity that's necessary. But I think that one of the critical things that is really important when you think about the Mastercard Africa Growth Fund, which is a facility that we are really taking investments to first-time emerging fund managers, is to recognize the capacity and the capabilities of the fund managers. And I think oftentimes when people say that they are first-time managers, it's just because they don't have the requisite track record. And I think I like what Riva said, that when we go into due diligence, that we're looking at different things as opposed to the traditional checkbox that we have. And then also on the governance piece, I think that it's really important for us to recognize that these fund managers that we're investing in do have the governance and they do have the representation, and we're not using a different approach. I think there is, because the source of funding is philanthropic, often there's some confusion around assuming that we're just providing philanthropic capital. I think that there's a difference here, that we're providing catalytic capital that we can recycle returns to reinvest in other fund managers as well. So we do require that there's some sort of returns as well. And then we also have a focus of mobilizing local capital as well. We have a very huge focus of working with our fund managers to make sure that we are able to galvanize and bring in additional catalytic capital so that they can grow the investment. Really, what we think about it is that there has to be long-term growth and sustainability on the continent, and we can do that if we are able to sort of invest in these fund managers as well. And really, we are seeing returns coming out of these fund managers. We are seeing the impact, and we are seeing the impact especially on jobs as well. Yeah. So I'd like to pause.
Yeah, no, the great insights, and also a teaser to some of the impacts that you are seeing to applying a different approach. And Jane, if I can unpause you once again, just to find out from you, in terms of the industry, what have they had to say about your style of approaching investments, this nuanced way of not applying a one-size-all approach as is done perhaps in Europe and in the US, and tailoring it to the nuances here on the continent? Has there been an embrace of this different style or strategy, or have you faced resistance still?
No, actually, we haven't faced a lot of resistance at all. We've actually faced a lot of the DFIs and a lot of the other co-LPs, and a lot of the institutional investors are actually coming to us and having conversations as to how they can actually contribute and how they can actually co-invest with us as well. I think that a lot of the other investors didn't have the ground knowledge. The Africa Growth Fund is actually managed by professionals who live and breathe and stay in Africa. So they have a good recognition of the cultural nuances. They have a good recognition of the macroeconomic environment. And so they have actually come along the journey with us. We are seeing more co-investors coming with us. We are seeing actual investors who are coming along with us in DD and actually coming and approaching us that, look, they're interested in some of these fund managers and what has been our experience. And we are seeing us sharing the learnings that we have actually received. And I think that we are also actually mitigating some of the perceived risk. I mean, the macroeconomic environment in Africa and in some of the countries that we are invested in, oftentimes creates a perceived risk that investment is not going to be returned. And I think, like I said, it's a perceived risk because there are ways to mitigate it. When you think about currency risk and inflation, there are ways to structure our investments that sort of mitigate some of these risks. And we're seeing that and other institutional investors are coming alongside with us to sort of ensure that they can, especially with the pension funds, right? Because pension funds, in the reality of it, they cannot do anything but market rate returns, but they are excited to come alongside with us because our initial capital is actually absorbing losses as well. And so they are more comfortable to come in and have those investments alongside with us as well.
Yeah, wonderful. Absolutely fantastic. And just a reminder to our viewers who have logged in to this conversation, we do want to hear from you. There's the QR code. It should be up on your screen right now. There's going to be a couple of questions that we're going to be throwing your way as well as we try to get to the bottom of the conversation around the narratives and the perceptions of facing investments over in the African continent, and as well as, of course, investments that are trusted in the hands of local fund managers. Coming to you, Edzard, because so far from this point, we have focused quite a bit on the perception of mainly a foreign capital coming into the continent and how this foreign capital has decided to allocate itself and spread itself across the various fund managers here. Some would argue that the local fund managers, particularly the bigger institutions, the larger fund managers and pension funds here on the continent, also have a very, very big and important role to play in shaping the narrative. Can you just address this and the degree to which you think that if more local money takes bigger steps, foreign capital will naturally follow?
I think it's a great and important question you ask, right? And so far, we've been sort of, during this discussion, I think mostly pointing fingers at capital allocators from maybe developed markets on how their perceptions shape capital flows into Africa and specifically African fund managers. But I think really it's important to acknowledge that local investors, I think you named pension funds and even fund managers ourselves, we carry a shared responsibility in either reinforcing or reshaping those narratives. I think the cost of silence or inaction on this front is high, and it really currently is where that lies. It means continued underrepresentation of African managers in global portfolios, but it also just simply means a missed opportunity to build ecosystems fit for purpose and reinforces the dependence on foreign validation. So how do we change this narrative? I think a few of our colleagues have already alluded to the value of storytelling. Storytelling makes impact visible, human, and relatable. That's, I think, one lever. But I think there's a few more. I think transparency is another key lever. Right now, everybody is gathering information, but very few people are willing and able to share what's being gathered. And I think in order to build trust, one needs to trust counterparties and share the information they gather. And I think the third lever is really on collaboration and really about sharing learnings, how different perspectives can actually lead to improvements and learn from each other's mistakes. But I think collaboration actually also key in the investment industry helps to diversify risks.
Yeah.
So, yeah. Go ahead,
Helps to diversify risk. Sorry to punctuate your sentence there. Feel free to conclude.
No, I can speak to this some more, but I think, specifically to the two examples you mentioned, right? So pension funds and fund managers, what kind of roles could they play, and how could they step up in order to improve those perceptions? I think for pension funds, it's really about collaboration. Right now, there are very few pension funds that operate in the private capital space. It's between 1% and 5% of the capital allocated by pension funds goes to the private equity and venture capital space in the continent. If you compare that to developed markets, where that lies between 5 and 15%, you see that there's still a big opportunity there. And although some pension funds are venturing into that space, they are not sharing that information. And I think if they collaborate more, like they do in the listed space with their peers, they could actually lower the hurdles and bring other partners along.
Yeah, I had a conversation with one of the major pension funds on the continent, and one of their allocation strategies is to apportion around 5% or so of their investments into the rest of the continent. And they were talking about the fact that they were actually struggling to meet that 5%. They could do even more than 5%, but they were saying that they were struggling to actually find investments out there in which to allocate their capital to that actually tick the boxes. And I just, perhaps speaking on behalf of some of these pension funds who want to do more but are struggling to do more because of what is being presented to them, what, Edzard, would you say to that in terms of potentially overcoming those barriers?
Yeah, I think this is exactly where transparency is actually key. So there are other players that have much longer and far deeper experience in this space already. So to name an example, DFIs, they've been in the African PE and VC space for the last 20 to 10 years, depending on the asset class. But they hold rich data and rarely share that publicly. And having worked at a DFI myself for some time, and having seen the amount of valuable data that an institution like that is able to amass, but is unwilling to share, I think this is really a missed opportunity, and they could actually, by sharing more about the successes and about the failures, they can help parties like pension funds along and show them the way.
Yeah. Certainly, and definitely something to tease further with the other speakers as well. And Nika, just to come back to you, because you started off by giving us a broad picture view of what is happening in the space, both locally and globally, just talking about, the fact that even globally we are seeing a situation where quite a significant, in fact, the majority of funds are being allocated to managers who happen to be male, as opposed to what we are seeing from the trust that is given to women, and particularly women of color. But maybe you can talk from a personal level then, and just reflect personally to what degree you have perhaps been challenged around perceptions in your work, and what you've had to do.
I think if I think about the personal aspect, it's the question of, can we do it? It's just a question. And it's hard to say, like I said earlier, we're emerging managers. You're always going to have this type of question. It's hard to say that this was because of me as Nneka rather than because we're an emerging manager. So you sort of have to roll with it. I think you're going to, similar to what we say to our founders, you're going to get more no's than yeses in any part of that fundraising journey. And so you have to just continue to bear with it. I think part of it is talking to other managers, thinking about the network and learning from that opaque information, as Edzard mentioned, about who's actually interested in deploying and investing in African emerging managers and female managers as well. And part of it is continuing to hone our investment process and our thesis, and thinking about how we support the founders. So I think as much as I might, get a no, founders that we work with are probably getting even more no's than we are as they go out to raise capital. And so hearing from their experience and almost learning from their resilience and their strength is something that keeps me going. We have a company in our portfolio called Schittlers. And when I met the founder, this was probably 5 years ago now, I was so impressed by everything she was building. And she was definitely getting some no's. They've gone on to raise capital in multiple rounds since then, but hearing all that she had done to build the business and hear how she goes out to fundraise and her resilience, and that really keeps me going through any kind of the no's that I'm getting in our process, because we know that there are entrepreneurs out there who really could create significant opportunity for the continent and solve significant challenges like in the transportation sector if we're able to raise capital and deploy to them. So I think that keeps me going more than any of the no's that I'm getting in any of the rooms, or any of the times where perhaps you understand that this person is not interested in what you're selling. So I think the founders that we get to back really keep us going through that.
Thanks for sharing your cup of motivation in terms of what enables you to continue pushing ahead despite resistance that you have faced in a personal capacity along the way. And perhaps I just put that question to everyone on the panel right now, Riva, and coming to you. It's as a senior investment manager, senior female investment manager. I mean, have you had to face or contend with doubters or naysayers who have questioned whether you can do it? And maybe if you can just take us through some of your personal reflections along the way.
Yeah, no, I think if you haven't faced a few no's, you're definitely doing something wrong. So there's been issues and challenges, and particularly where it pertains to where there is a perceived idea of risk that I thought wasn't grounded in data. I think what I've done is I really stayed curious and asked, where's that coming from? You know, asking the whys and getting to the point where we can see that there's a shift. But most importantly, the first time that I actually led an investment where we invested in the first-time manager, I remember the big pushback was there's no track record, going back to one of the issues that we discussed up front. And it's interesting because these two individuals had been managing a fund for someone else, so were principals in another fund, and somehow the experience that they had leading that fund, because it wasn't their fund, wasn't counted as experience. And so I shifted the definition of what is first-time manager. If you have led multiple investments, structured multiple deals, in my view, that is experience, that is track record. And so that's some of the work that I've had to do internally on how do we define experience? What does it look like? If you've never run your own fund, but you've done deals for other people in a deal team, does that count as experience? And I think it should. So that's some of the stuff that I really, I take my team and my internal approval bodies through, just telling the story of how we're defining these things, and is that definition fit for purpose?
Yeah. Jen, a similar question to you, but perhaps maybe flipped over, just given the fact that you go out there and you meet some of these fund managers and you make the decision as to whether they are trusted and are worth backing. In terms of the backers that you do decide to say yes to, perhaps maybe you can draw from some of their strengths that we can learn from, that can also help us in pushing back against perceptions that perhaps we can't do it.
Well, first, I like to recognize the panel. I mean, I think 5 years ago, this panel wouldn't look like what it looks like. There's 3 female senior investment colleagues here and 1 male, which I think it's in itself something that we should all be proud of. It's a step in the right direction. I think that from our perspective, I mean, I think what we've really found is that these are people who are very good at the crafts that they're doing. They're very engaging. When we think about when I reflect on the type of investment vehicles and fund managers, of which NACAR is one of them, is the resilience and the knowledge that they bring to the table. And these are people who actually know what they're doing. They they've worked in different spaces. We have people, fund managers who have been working for well over 30 years, managing balance sheets that are greater than even the capital that we are allocating to them. And so it's really a challenge to sort of question their capability. And back to what Riva was saying is that there needs to be a redefinition of what track record means. If somebody has been managing a 60 million balance sheet in their past life and not necessarily through fund management, it's really bizarre to sort of question their capability and their capacity as well. So for us, we look at, both quantitative and qualitative qualities within the fund managers and the investment vehicles in which we sort of investing. And my experience has been the knowledge is there, the experience is there, the passion is there, the understanding of what patient capital is supposed to do, and the drive for impact and creating long-term sustainable jobs is also there. And so it's easy for us to sort of, we wish we had more capital to allocate to more fund managers. We're limited in capital. I think that's more what the issue has been, is the limited amount of the capital that we have to allocate. We are not short of fund managers who are knocking on their door, who are very qualified. It's a very difficult decision sometimes to make, to go with one fund manager versus the other. And it's not a reflection of lack of capacity or capability. It's usually because of the limited nature of the capital. So we call on to different investors, co-investors, to come on board with us to invest in these fund managers, because they are doing the work. They're driving long-term sustainability. They're redefining what philanthropic capital can do on the continent. And I think that's the call to action from us. And that's what we're finding.
Of course. Itzad, I want to ask you to lead us down the road of perhaps who holds the greatest power to reshape these narratives. But I think that it would be also wrong for me to assume that there aren't any biases or any challenges of a stereotype, as it were, that you've potentially had to contend with in your line of work. I do recall in our preparatory conversations you mentioning the fact that you're based in Nairobi right now, but care to share on a reflection in which you have been challenged personally within your capacity at work and what you've done?
Thanks, Fifi. I think maybe just to quickly reflect on Jen's point, I think I must say I'm really honored and humbled to be in the minority today, and I think it's really a testament to the change of narrative that's already happening. But so to your question on sort of how have I challenged perceptions in my personal day-to-day. I think perceptions and biases exist everywhere, and we will keep encountering them even if narratives change and the likes. But personally, working for a fund manager that has South African roots, and South Africa being one of the countries in the continent that has struggled historically a lot with biases and has in many ways successfully challenged some of those perceptions. I'm still confronted by my own biases and those of people around me in that work context. So working, as you said, in our Nairobi office, we are a smaller satellite office. I try to challenge myself to act as a bridge between our South African colleagues and our Kenyan office by encouraging collaboration and really truly trying to let everyone see that diversity of backgrounds really leads to diversity of opinion and better outcomes for everyone.
Yeah, absolutely. And there has been so much research that has supported that in terms of the diversity of backgrounds, particularly on board, not only leading to better outcomes for everyone, but actually being a significant kicker in terms of boosting the bottom line. But perhaps let's all then go down this road on who holds the greatest power potentially to change this narrative that I think that we are in consensus with is not entirely accurate and is in some cases skewed to the negative, particularly when it does come to the continent as a investment destination, and also when it comes to the managers of capital here. I mean, I would argue on my part that we, as the media, have a significant role to play as well. The same biases, perhaps, and challenges to objectivity that do exist in other sectors also exist here in the media, and perhaps we definitely do have a role in accessing and using a bigger body of data to tell a more comprehensive story about the African continent and the metrics of doing business here. But if I put it to you, after having taken accountability as a media practitioner of my responsibility to also play a part here, if I put it to you all in terms of who you think in your individual capacities or your professional capacities have the biggest power, hold the biggest power to change the narrative of the continent and the investment vehicles that it does have to offer, who would those individuals, stakeholders or stakeholder be? And Neke, once again, coming to you to start us off.
Thank you, Fifi. I'd say we do, all of us on this call. So we have, so fund managers, capital allocators, I think we have significant power, and it's a privilege to manage assets. I think it's something that we fully understand, that we have investors that we're reporting back to, but we also have the broader ecosystem, especially given that it is still relatively nascent, that we have the privilege and responsibility to take these funds and return capital to our investors. I think it's something we all fully understand, whether we are investing capital into funds or we are as funds investing capital into founders' companies. So I think for us, we look at a set of matrices that we've developed to help manage some of those downside risks. But we also have to understand what our investors are looking for in terms of returns and how they expect us to invest into companies. But really, my view is time has the biggest power, and that's part of the challenge with investing in the asset class that we're investing in. So you might have 10, 12, 14 years to return your fund, return your capital, and during that period of time, you have to demonstrate, whether it's through storytelling or through data and reporting, that your companies are moving in the right direction. And so time ends up holding, I think, the most power. And in the absence of time, because we don't have time as you go out to raise additional funds, you have to really be able to tell that story with the data. So that's why I'm saying fund managers actually do have a lot of power to be able to change that narrative, at least in the closed ecosystem of their investors around them. And then I think broadly, capital allocators do have significant power because of the amount of capital that they have under management to deploy in this space.
Yeah, I was once in a conversation with a major capital allocator globally, one of the biggest, if not the biggest in the world, and asked why they weren't doing a lot more on the continent, to which one of the responses that was given to me was they're not always comfortable with allocating money in a country whereby the next day you wake up and someone else is in power or the military has taken over. And this is to add to the point of who has got the greatest power to change the narrative, because of course we cannot escape the fact that some of these negatives do happen, in which you do have military coups on the continent that do take place and introduce a policy uncertainty that shape and impact the returns that investors initially thought that they were going to get. Not to say that this is an African problem alone. The same kind of political uncertainty does happen elsewhere in the world. But I thought I'd just throw it in there as we do mix up this cocktail of who has got the greatest power to change the narrative. Riva, in your view, fund managers, investors as well?
Yeah, I definitely think that's part of it. I agree with Neka, it's all of us. But in addition, maybe some of the stuff that you've mentioned, I think policymakers need to create an enabling environment that creates that trust. So they definitely need to be part of the solution as well. And in addition, I think the media controls what gets attention and what doesn't. And one of the things that I think I spoke to in the beginning is how the perception is shaped by, often we overemphasize all the bad stories and we don't give enough attention to the good stories. So I do think a collection of policymakers, of fund managers, investors, and the media working collectively is probably how we change the narrative. But more importantly, I think all of us in our respective work need to challenge the stereotypes with facts, nuances, and lived experience. I think that really will shift sort of the narrative. And going back to maybe some of the stuff that I spoke to on the fund managers that we looked at or that we've invested in, there was really a lived experience from the principals in that fund manager that convicted me and made me believe in their story, made me believe in their capabilities, even before they had ever done anything. And it's those sort of things that I think we need to collectively work at, and that will change the narrative.
Yeah, absolutely. And I'd even add, in terms of ensuring that the media industry is able to do a better role in telling these stories that are untold, definitely it would need a resiliency on many of the economies in which these media do operate, because as you know, what tends to happen when we do have economic slumps, one of the areas in which companies do tend to cut budgets is with advertising and marketing, and then it becomes quite difficult for any entity to continue as per normal with a reduced budget. Not to say that it's an excuse, just highlighting one of the reasons or one of the factors that are constraining the media's ability to do its role in its full totality. But I suppose, again, drawing back to the importance of policy making and ensuring a resilient economy whereby all stakeholders are enabled and are supported with growth. Jen, your take, and I mean, it's either, who holds the greatest power in changing the narrative, or we could flip that question to say what the biggest barrier is right now in attracting more capital on the continent. You can choose which viewpoint you choose to answer the question from.
Yeah, I mean, I think telling the story is really critical. I think when I think about my own organization, MEDA, where we've invested in multiple businesses that are actually sustainable across the globe in Latin America and Africa, and I look back at the businesses that are flourishing, some of which we've exited, some of which we're still in, and our ability to be able to tell that story of what philanthropic capital has been able to do. They've actually established companies, organizations that are employing people, that have expanded, some of which have been acquired by different organizations, some of which are really expanding beyond the countries in which we actually invested in. And our ability to be able to tell that story, I think it's really critical, because it shows what, 120,000 invested in an organization could do when the company is actually generating 6 million in revenues 10 years later on. So I think really being able to tell that story is really critical. But I think the stereotypes, flipping back what you're talking about, the barriers, we tend to focus on the stereotypes and the things that are not working. So in investments, a lot of people talk about currency risk, and we tend to focus on what that would do to our returns, as opposed to the impacts that the investment is actually doing over a long-term period. And so if we start flipping the stereotypes to our advantage, I think we would be able to sort of highlight and showcase the impact of these investments across. But I think there's a critical player here, which is people in academia. I think they hold a critical piece of the puzzle, because they have the influence of writing papers and journals and articles that sort of test the hypothesis of what we are doing. They get case studies. A lot of times when you're looking at venture capital case studies, in any writing to support some of the investments that we do, most of that comes from North America and Europe. And so I think they hold a critical piece to being able to tell the story, being able to articulate the story. And of course, I agree with Riva, policymakers as well. They need to create an enabling environment that makes the countries that we invest in really groundbreaking and really revolutionary, to make sure that we're able to make investments that are sustainable in the long term as well. The truth of the matter is, at the end of the day, capital is looking for returns. And that's something we can't escape. So when you have an environment in which, someone invests today and tomorrow inflation is at 13%, and the next day the currency is fluctuating, it's really hard to make a case for foreign investors to come down because they are looking really at the bottom line as well. So we do need the policymakers to come alongside with us in this private equity and venture capital market.
Yeah, as has been said previously, capital is not motivated by opportunity necessarily, but by a return. The proof is in the pudding. Edzard, I'll give the final question to you. We are about to get the insights also from our viewers who have been tuning in. We're about to get into the QR code and launch it live. But before we do, I'd like your take on who holds the greatest power to shift the dial.
Yeah, so I don't think there's a single answer to this, and I'm personally someone who believes that often a group collectively can change much more than the sum of its parts. So I think without wanting to repeat some of the insights of our colleagues already, I think it's clear that in sort of the capital allocator space, there's an urgent need for transparency, for more collaboration, for more storytelling. But and on the front of policymakers, there's an urgent need for clarity. But I was struck by I think it was Jen's last comment on the need for the scientific community to step up and show more deep research and present facts of private capital investments in the African context. But personally, I'm of the opinion that there may be the media can play a bit more of a role than it already does today. Right now, to be frank, I feel that there is no real mainstream coverage of private capital in Africa. The narratives that we see are GP crafted, very well taught stories, like we've explained before, but there is limited investigative lens. And I think exactly like what we are doing today, that a media can really can and should spotlight transformation and dare to ask the tougher questions to validate returns and impact.
Okay, opened up an entirely new industry potentially there that is ripe for investments, I'm sure. But I couldn't agree with you. As I said, I'm not one to abscond from accountability, and I do agree that there's definitely a lot more that can be done. We're going to pause right now because we're just going to get the intake from our viewers who have been tuning into this discussion. As I said, there is the QR code for your scanning. It moved from the screen quite quickly. Wow, okay. Okay, it's back. There you go. QR code for those of you who haven't had the opportunity to scan as yet. You'll know that we have had the QR code on the screen for quite a while, almost an hour or so, but just giving you a few more moments to do so. Okay, moments up. Those are the questions that we actually want to ask you and insights that we want to glean from you. We'll just give you a couple of moments just to look at them, answer them as you think through, and we'll discuss. That's the first word that does come to mind when it does come to investing in Africa is the fact that potentials are extremely high right now, but overlooked. And that does speak to an area of focus. Let's take you through our next question. And as you can see on the screen, what we want to know from you is what do you think has the most influence in shaping global investor perception about African funds? The options are there at the bottom for you to choose from. Close one, tightly split between international media and development finance institutions in terms of the biggest factors or the most influential factors shaping global investor perceptions. Interesting one, and of course African fund managers themselves following closely after them. So going back to the point that Edzard made as well about the importance of local money paving the way, and perhaps that being the requirement to ensure that foreign capital could follow suit. Let's go to the next question. We've got one more for you. How closely does public perception match the actual performance of African-led funds, in your view? Do you strongly agree that public perception matches the actual performance of African-led funds, or do you strongly disagree? All right, so strongly disagreeing there that public perception matches the actual performance of Africa-led funds. So that just speaking to that perception and reality gap that we have been speaking about for the past hour. Last question, we actually do have one more. So rank the most effective ways for African fund managers to shift their perspective or to shift perception. Rank the most effective ways in your view in around 30 seconds or so. So once again, the media and storytelling ranking quite highly in terms of shifting the perception. And again, I would definitely agree. And I do hope that that does mean that in future, when we do host conversations like this and similar platforms, that you yourselves also avail yourself to coming to speak up, to the point that Edzard made about a lot of these deals and a lot of these investments being done in the dark, in secret. The transparency is also a very important element in ensuring that storytelling is able to be told fully as well as accurately. But we have come to the end of today's wonderful discussion on a very important issue, of course, for the continent at large. I would like to thank all my panelists for their fantastic insights in helping us advance the narrative and certainly shift the dial for the past hour that we have been in conversation. Thank you so much, and of course looking forward to speaking with you again in similar related platforms. But until next time, from myself and the team at CNBC Africa, it is goodbye for now.